Hi, welcome to the Market Alert for Thursday, the 1st of December 2016. So yesterday, as I said in my note, that the market had put in a buy signal and traded up and managed to get to 19.5 points before getting to the scalp. We had the crude oil figures out at 3:30, which is a high impact news item, and as I said in yesterday's Market Alert, you don't want to be in for this. So there was a chance to actually take some profits off the table even though the market didn't hit the scalp. You can see the market there trading. You don't want to let it go past break even if you're getting up to nearly 20 points. But this on this occasion, the market does. You'll see prices moving back and coming back there. And then you get another chance to actually get something off the table as the market moves back again and get out at break even as we get even closer to the crude oil news. Now, a few years ago, I know I've said this a million times, but a few years ago we would never have bothered about the crude oil figures, but they've become a high impact news item since losing 73% off the highs of a few years ago. So that's why we need to stay away from this one. So there was the opportunity to collect some money on this one. And then we had the crude oil figures. They came out. I think you'll see somewhere here. There we go. You see it flashing. There you go. So at this point, I'm going to look see what the crude oil figures are, and they came out, I think, with a minus, didn't they? Yeah. Well, it's not quite out yet. Let me just grab this one and scrub along the timeline. There we go. Okay, coming back and having a look. Right. So nearly minus 1 million barrels there for the release of the figures. They were expecting a surplus. This is actually bullish for the market, but given that the markets now are so rigged and manipulated, it's a case of waiting to see what happens. So we'll fast forward. The market does manage to put in a bit of a rally. I mean a bit, not a lot at all. And then eventually we get the sell signal, and then I'm going to fast forward a lot here because it takes ages. You see how sideways the market is before we eventually get down to the scalp there. And as I said in the note that I sent out, don't let it go back above break even or get out at break even if it isn't going to go. But that was so sideways during this bit, incredibly difficult. Fortunately, I found the 19,200 a bit of a resistance area there. So let's move on and have a look at that in the bigger picture. So eventually the market it broke in the middle part of the evening, and again, I'd already finished by this point. I hadn't actually bothered to stay at the desk. I thought it was going to remain sideways, but we did have a bit more of a move, and on the overnight we've got some more weakness as well. The market's actually come alive, which is great to actually see. And in the daily chart, you'll see more of this. We've got what I would call an upthrust type bar. The market prices were thrust up in the pre-market, and then they've been sold into. And this is the highest volume we've seen for some time. So there was a bit of selling around yesterday as well. Market's down on the overnight. We've got a new all-time high in this market. We've broken the 19,233 level, and we are due a correction in this market. So you can't just keep going up and up and up like this. It's starting to become the norm. What we need is a good 20-25% correction in this market. Then we'll have a really good buying opportunity to ride the market back up. They're not going to let this market go down just yet. There's no chance of that happening. There's nowhere else to park the money at this time. The yields are starting to increase a bit in the bonds, but really the best returns are still in the stock markets and some commodities, in particular metals markets, zinc, iron ore and that type of thing. But even they've been slammed in China this week as well, as the authorities have intervened to stop prices from moving higher. So news-wise today, what have we got? 3 o'clock we've got ISM manufacturing. This one's not so bad, even though it's an high impact news item. It's sort of less, I suppose, in its reaction as crude oil. That's at 3 p.m. and everything else is out before. What you've got to remember today, though, is it's the day before the non-farm payroll figures, and these figures are the ones that are used by Yellen to determine whether she's going to increase rates or not. I think it's a given she's going to have to increase rates anyway. I don't think there's any love lost between her and Trump either, so I would imagine that she'll do it anyway, not necessarily out of spite, but it doesn't matter now because her mate Obama will be leaving office on the 20th of January anyway, and no doubt got the removal team in already. So ISM manufacturing, not much of a problem. Tomorrow is the biggie, as I say. Watch out for the non-farm payrolls. Unfortunately, I won't be here tomorrow to actually see that either. I have to travel tomorrow, which is a bit of a pain. I will see it on a mobile device, but not live at the desk as I normally would. But we'll take a view on that tomorrow morning. Right. Implied volatility is 1131. This has come down slightly yesterday, but stuck in this sideways range, treading water whilst the markets decide what to do. It'd be nice to see it move lower, but still I've seen big moves off the sort of 11% area as well. We've had a low of 1047 recently, so we've got the setup really for a correction if need be, and hopefully we'll see that from tomorrow when we get the non-farm payroll figures, because if they come out far better than forecast, then that means that interest rates will have to go up, and the market's not going to like it. If you just go back to January of last year, you'll see a 2,000 point drop in this market from between Christmas and New Year. The move started and ended on February the 9th. Right, that's it for today. I will see you in tomorrow's market alert and reporting during today. Expect the market to be fairly quiet, I would have thought, unless something really gets moving, sort of the eve of the non-farm payroll figures, as it were. And, somebody knows what's coming, but only time will tell. We'll see what happens in the pre-market session to determine whether that's the case or not. That's it. Thanks for watching. See you in the next one.